Hello, hello. Okay, let's get this show on the road. Hope everybody's doing well. Probably Casey gonna be first, per usual. Let's bring this into screen. Let everyone know I'm live and all that great stuff. Pardon me for those, forgive me for those who are already here and are forced to wait a little bit. Okay, we got that. Now, this one. Okay. And the Discord. Discord. There we go. Alrighty. So, let's go over what's happening in the market, because that's what everybody's probably wondering about. The market has been rather boring to me. To some, it has been more so volatile than others. As I said yesterday, we're gonna gap up exactly as predicted. I would have expected us to see a little bit more of a lower tendency at this stage, but that's normal. That's how we see. Again, we follow step by step, besides the overall long duration predictions that take some time to play out. We also follow the step by step, what kind of is in front of us, in front of the windshield, so to speak. So to be really objective about this right now, pardon me, sorry, being human a little bit. So right now, what are we really seeing? We're seeing more so an uptrend. I hope the volume is right and you guys can hear me well. There's nobody there yet, so I don't know. But so the momentum right now appears to be pushing higher right now within the framework of the channel that we're in. It's far more likely than not that we'll end up testing this very resistance of the overall channel. We're within the framework of short term, similar to this. In fact, right now, it's far more probable than not that we'll see a retest of that 7,517, simply given that we still are very, very, very much close to this. And we have our momentum right now pointing upwards, so it's more so bullish within the framework of the 5 minutes, within the framework, again, channel as such. We are very near the top right now, arguably, although objectively right now more so bearish than bullish. We still are in bullish territory, in overbought territory, or just crossing it, around it. So right now it looks like more of a balancing move for the market for the following, I would say, arguably, several sets of 5 minutes. So several sets of 5 minutes. Arguably we're looking at 15 or 20 minutes from where we're at right now. If we continue with this tendency, if we correct back up, we have at least 5 or 10 more minutes of bullishness, which appears to be far more likely to be bullish rather than bearish, given what we see that is moving or pushing through in the smaller time frame. Now, if we look at the 5 minutes, as we said, also, since we are still kind of in neutral zone, that can result in some temporary kind of, back and forth, ebb and flow. And then after a little while, let's say within 30 minutes, which we're going to look at the 30-minute time frame very shortly, can end up finding itself roughly around the ceiling, the resistance of the current channel we're in the framework of, and so subsequently retest with some tiny amount of slippage, 7,517, as you can see right here that number, 7,517.12. That is a major support resistance level we're familiar with, that played a major role multiple times before. That's I moved it by accident. Now, that played a role before, and so subsequently, given its location and given our momentum, it is more likely than not to play a role. We have a junction of our downwards major channels, you can see, and this sort of area, and so very, very, very likely that we will see this area play a role sometime soon, at least that transition, that maybe wedge, or even that area, before we actually see a breakdown. Why is that? Because as you can see right now in the 30-minute time frame, although we are transitioning, crossing over in terms of our moving average, which implies to us that we're about to become a little bit more so bearish than bullish within the framework of the following, let's say, hour or so, at least, given how we're looking at the 30 minutes. We have still 15 minutes to go before this particular candlestick gets locked in. And I don't think, and it doesn't seem like at the moment that it will push any higher, as it having this crossover. It's kind of that mixture of forces, and so we're kind of having a little bit of equal kind of behavior. So pulling a little bit lower, pulling a little bit higher, in the grand scheme of things, staying within the same framework of the very same levels, give or take. 45 minutes. Now here the increments start to grow, and so subsequently the overall behavior can take longer or last a longer duration. So since we're looking at the 45 minutes, and right now we are actually 44 minutes away, so we just locked in that sort of previous candlestick and just started the current one. And the current behavior is, again, temporarily more so bullish than bearish, gives more likelihood, probability for that area that is right above us, that 7,000. Basically what we're seeing, there are multiple reasons on the smaller time frame why we would hang around these current levels right now, or subsequently will result in a retest of 7,517. Greg, does that mean we're overall bullish and moving higher? I mean, because right now temporarily we've been moving sideways for several sessions, arguably since the 6th. From the 16th, we've locked in that channel, right? And we stay within the framework of that channel, basically, arguably since, 16th to 17th, as you can see, right here into the 20th, 21st, and we're still within the framework. And so, arguably saying, basically, what we're seeing here is that we're still within that very same framework that we have been in the past soonish, we can call it a week. Now, on the hourly time frame, this is where things start to get interesting. Here we are bullish, so that confirms our thesis of filling in a gap. Well, Greg, what gap? Yes, you guys didn't notice, because it appears as if this gap has been already filled in. Greg, what are you talking about? So if we go here into the 5 minutes, which you don't realize the market is striving to do right now, or moving to do, is to fill in the gap that basically gives us a target of roughly, to be super precise, 7,533. So those who misunderstood me that it's our ceiling right now is 7,517, here is a surprise. Right now, with this hourly momentum that we saw, that we still are somewhat bullish, it's far more likely for the price action to fill in the gap that lasts all the way to here, right? So basically, kind of, I'll show you, it was out of screen. Sorry, pardon me. Basically all the way here, right? So here on the 45 minutes, we can see it. And here it appears on the 30 minutes. You can see there is a gap to be filled. There is a leftover of a gap that was not filled yet. And so it's far more probable for the price action to go higher and fill it in, as well as completing the process to the ceiling of the current channel that we're working our way within. Okay, so pretty simple so far. I would hope. Hourly confirms that probability, that likelihood, given how we're still bullish on the hourly time frame. So we're far more likely to retest, as you can see, also what is the median of the current channel that is basically sitting sideways for quite a while, arguably sideways with a slight inkling of upwards, right? So this is the current channel we're within. We have the larger channel, but the larger channel, as you can see, we already are tilting inwards, so it doesn't matter. We're not currently following it as much as we are following a transition from this larger upwards channel into at least the downwards area, which is, as I pointed out before, around 7,300, and we'll see. So if we will see more bearishness in the price action that is up to come, those who, by the way, noticed what is secretly hiding sort of in the framework is a head and shoulders. Yes, absolutely. So of course now we're completing that shoulder, and once it's done, we're going to start making our way downwards. It is very uncommon to see sort of a set of head and shoulders peak to peak like that. This is almost like a double top sort of structure, but can happen when we drag out a process that should have been already having a more so bearish tendency. When you end up dragging it out, you end up with another head and shoulders that is almost side to side, one next to the other. Not exactly a common behavior. One way or another, what it appears to be, and we will see that the result of this one is going to be continuing downwards, or at least so that what my analysis shows. Of course, that's the beauty of this channel. We're all about the technical analysis and the processes that are technical and numerical and can be quantified, right? And so at the end of the day, the beauty is that anyone can do their own analysis and sort of derive from it as they please. Of course, the analysis has to be objective. Let's not forget about that. So 4 hours still, this is kind of an interesting one. I mean, right now, since we're having a bit of a relief rally, right, it kind of makes sense and jives with what we saw before. So we're saying at least we're going to have a handful of hours that are still bullish, right? If we switch here, kind of one click away from here, we find ourselves bullish with a bullish tendency, right? With bullish momentum, entering overbought territory. Nothing is more bullish than this. This is peak bullishness, if you will, with clear divergence. By the way, something I highlight quite often. Clear divergence means a strong bullish impulse. In our case, it's only an impulse. So like, Greg, new higher high? No, not new higher high. In fact, a lower high that will culminate roughly around here. Hello, Greg from Seattle. Oh, that's awesome. Ray, good to see you. I've seen your comments multiple times. I appreciate you sticking around. Thank you. And yeah, that's pretty nice to know where people are from. We have actually in our community members from everywhere. So salute to you for being from Seattle. Okay, let's continue. I hope you're enjoying the content so far. I think I gotta clear my nose. If you're gonna forgive me for half a second. Apologies. Be right back. My nose has been a little bit runny lately. My apologies. It's all that sitting under the AC. I'm glad to see you are doing well. Of course, in fact, what do you mean I'm doing well? I'm doing phenomenally well. I'm doing a lot better than I used to recently. I had some sinuses issues and I couldn't sleep well because of that. Then I had dental issues. Basically, I was all falling apart and shit. But now I'm fine. I'm fine. The Mac, which is Damien, I believe, right? It's hi, brother. Hope you're doing well, brother from another mother, Brazilian mother, Brazil. Yeah, you see, we got here everyone from everywhere. Good to see you here, brother. So let's continue with the analysis. So basically what we're saying, since on the 1 hourly we're still bullish, and that kind of jives very well with what we're seeing in terms of our 4 hour, but the 4 hours, since it's in bearish territory, it is kind of a combination. That's why we don't think we pretty much can read out of this that although it's going to be bullish, what would feel to us on a shorter range, day to day, kind of from today, tomorrow, as I said yesterday, this week can end up having a little bit more of a leftover bullish impulse to culminate and complete that shoulder that we have on the left side. Its equal will be here on the right side. Again, head and shoulders to kind of clarify, right, to those who haven't seen, because we were just talking about it like a second ago. Here is the shoulder. Let's make it black so you guys can see what I mean better. Here is that shoulder move. Here is your head. Now another shoulder and downwards trend. So we definitely see evidence for that culmination of a shoulder, which roughly resides, as I said earlier, 7,500 and 33.73, give or take. Why? Because we have a remnants of a gap there that needs to be filled in. For those who, in fact, let's clean that crap up so does not people don't get so discombobulated with all that noise and crap. Sorry, let me clean it up real quick. So as I showed earlier, we still have a remnant of a gap that appears to be the arguably reason for the market to try and go higher and fill that gap in. That gap lasts all the way to 7,533. If you want to see it up close and personal, let's go right here. You see here it appears to almost have been filled really, but what you don't realize that since this culminating point was right here and you're not just measuring to the bottom, but rather the end was here, right? The actual end, you see? And so there is still a remnant of a gap between this point and this point. When we're going to be testing that range, it's far more likely than not that we'll, of course, slip through it to confirm and then break down, which kind of jives with the idea of having some slippage out of the channel, right? Which will still, in a broader scheme of things, culminate in a break downwards. Not because of that 30 minutes. Those 30 minutes are implying on a process that is happening internally on the way up still. Why are we saying that? Because our 4 hours is bullish enough, okay, with a clear divergence, which is very bullish, sort of bullish signal, although in oversold territory, but still that is bullish enough to result in a lower high, exactly as we're expecting because of the head and shoulders harmonic pattern. You see, these things kind of work in tandem, they work together, right? But here's where things start being problematic. Because on the daily, we still are, well, we just have become really recently quite bearish. And that what pushes down on all that bullish momentum that we saw from earlier in the 4 hour, which is smaller time frame. What does that imply? That implies that within the framework of a downtrend, right? Within a framework of a downtrend, we are having an uptrend internally. Right now, this is what everybody's so preoccupied with. The problem is, as the longer sort of the trend keeps on going downwards, now you see you opened up territory and space for when this point culminates to fall even lower, kind of like so, right? If the channels are moving and depreciating or at least growing downwards, now you've opened up a sort of the space for the price action to go lower, which is exactly what we're building up right here in our transition into a downtrend, right? And all we're doing, we're moving up before we culminate down, just like what we said, because of this harmonic structure. Actually, you know what? Let's bring all of that back to where it was, so I can show it in a smaller scale, so it will make more sense. You see, the equal of this shoulder will be on this side. So, yeah, like so. I told you guys, you know what time it is. It's time to go take serious technical analysis. No bullshit. No bullshit. All right? Yes. Very good, very good. So, now, all of that is really, we're just like looking at, in other words, highway to hell. Very good, pretty much. Yes, exactly, right? Although, you see, the thing is that right now, temporarily, we are having sort of this relief rally. That's exact. Notice the wording, relief rally, okay? So it just gives us a bit of a relief of our tendency now that is downwards, okay? Now, why do we think it's going to continue and go downwards? I mean, Greg, you're saying we're bullish and all that great stuff, but where's the certainty we're going to continue downwards? Well, that's the beauty, because in the bigger frame of things, something I've been warning for some time now, that our weekly, especially, you see this weekly, for example, as it says we have still 3 days left, right? And we just transitioned into that bearish territory, kind of implies that that shoulder that we're talking about is going to be as shallow as I'm saying, and not will culminate in a higher high. It will result in a lower high simply because the bigger, larger time frame, in fact, is bearish. And that time frame, that daily, that is working its way within the weekly, is even furthermore bearish. That means right now we're not just looking several days out, we're looking into next week with this. So what we're saying is that temporarily within the downward trend that the weekly is forming, and I've been, as you can see, warning about this with various sort of, points like so, trying to imply that we're going to go down, right? And then correct eventually, but when we're going to reach very low lows. Of course, internally, we will have corrections, but my analysis shows that once this culminates, which is within about, well, it says 10 days, but really we are left with only 8 tradable days, right? Kind of like so. Yeah, you see, we have only 1, 2, 3, 4, 5, 6, 7, 8, 9. Sorry. 1, 2, 3, 4, 5, 6, 7, 8. 9. Yeah, 9. Sorry, 9 days in all, including today, right? So, yeah. Roy! Now this is a legend. Good to see you here. Thank you very much. Well, all of you are. Appreciate it. But Roy never fails to comment on my videos. Mr. Brian, rather. Royal Brian, right? Right. Royal Brain, sorry. Right, Royal Brain. I remember I recognized the thumbnail. You never failed to react. Never. Ever. You always are there. Absolutely. Yep. So, all right. So where were we? We were saying that once this culminates in about 8, 9 days, right? Basically depends on how you want to count it. Our leftover rest of our bullish momentum runs out. Sure, we can spend some time when both moving averages basically culminate and kind of move together for an entire month. Right, that's obviously a possibility that we kind of hang around this. Although, regardless, we're far more likely to see a bearish tendency coming through simply because what we saw in the weekly, wink, wink, hint, hint, right? Several weeks of pain, basically, at least. But basically, the broader picture is implying that once this monthly culminates, we're going to start a significant drop downwards. Let me clean all that crap up. Once the forces cross over, and our moving average will of course will continue dragging the market downwards, just like here, just like so. You're like, oh Greg, this was bullish. Yeah, you guys need to know cyclicality to understand why the last piece, again, it doesn't have to be bullish. This piece did not have to be, well, so bullish. Rather, to have a head and shoulders, you kind of must have it, but it didn't have to be so high. It could have been a lot more shallower and with the tendency downwards. That's why most professional technical analysts do not take the risk. This exact sort of outcome didn't have to be the way it did, really. And really break out of the channel right at the top. We really, like the market makers really squeezed the bejesus out of this one. I mean, I gotta say, gotta admit it. In fact, where is it? Just to kind of point out, this is exactly the same thing I've been telling my members that we're gonna see, right? Here it is. Those are the images that I show my members in the Discord. As you can see, the very same thesis, exactly as I expect, basically from what I'm telling you guys. Once we culminate our inner process right here, we're going to continue downwards, generate this sort of neckline all the way to 6,000-ish, 6,100-ish area. Why? Because there are multiple strong support resistance levels there, which works within this sort of proper. By the way, there is a proper way to build a harmonic pattern that head and shoulders, which is far more reliable than this support level. There are a set of them actually diagonally going downwards. These support resistance levels were actually, well, not generated, but rather found, as you can see right there. If we're going to zoom in very close, you guys can see these levels, these two blue lines were tested for the first time roughly around 29th of October 25, then retested right here again, then retested right here again, then retested right here again. You see where it is around December 25. And then those very same support and resistance levels were the ones to play the role, as you can see, of the neckline, the meeting of the shoulder, right? As you can see, that is the meeting of the shoulder and the neckline, right, of the head, right here. Those were actually the very same support resistance levels that played this major role. Casey, you beautiful legend. Howdy to you. Right back at ya. Um, and so what we're expecting is, again, these very same support resistance levels basically to play a role. Not just them, because there is a culmination, there's like a set of forces around this area. I was expecting that by now we would find our neckline already, not already, but at least be on our way to it. And like I said, I did expect this sort of secondary head and shoulders to have a lower tendency, which, by the way, if you pay attention, it does have a lower tendency. It is a lower high, and yet I expected it to be significantly lower. I expected it to have like a tendency almost, again, like so, inner working of a shoulder downwards. That's okay. I totally understand. That's why I say, guys, be patient. The market does not care about your retirement plan or how how you feel the market day by day. That ebb and flow does not matter to the broader scheme of things. In fact, again, that the beauty is, exactly as we were analyzing here, we're looking into sort of several weeks ahead, or basically into next month, which we know is gonna basically, this month will end in 8 days. And when we are seeing a clear potential, at least for now, let's call it as is, given our weekly bearish momentum, right? Once that plays out, which we know we have this week and next week, the more bearish this becomes, which we see clear divergence on clear strength into bearishness, which means lower price action, or culminates in lower price action overall. Even though we have a little bit of bullishness right there, it's still gonna be squeezed relatively quickly. We can squeeze all that bullishness within the framework of a couple of days, really. And if we're saying we're going to have a handful of bearish weeks, that will last longer and will result in a lower low overall, or lower high as well, in our case at least. So what we're seeing basically, once this crosses over, once we have a crossover of the forces, which will happen roughly in about potentially, again, these 8 days, not exactly within the 8 days, but following the time after it, we're far more likely, basically within the following framework of the following weeks, arguably 2 to 3 weeks, we're about to become significantly more bearish than we were recently, and the price action, of course, will start dragging us downwards. By then, we will, of course, complete that harmonic structure that I was talking about, the internal stuff we were talking about right here, a little bit of bullishness to finish up the shoulder, and then continue downwards. By then, we're going to be sort of finished with this, and the price action, as you can imagine, and the tendency will become a lot more bearish. As you can see, once we're saying basically this shoulder is complete and will start dragging us downwards, this is going to become bearish. In other words, we're saying, yes, still some bullishness to be played out, but once it does, more bearishness. In other words, temporary relief rally. That is exactly as we were saying earlier. So I kind of gave you a not instructions, but arguably a blueprint of where the market is about to be moving within the following weeks, in fact. So don't expect to wake up tomorrow and see all of this play out. Some of these things will take weeks to play out, some of these things days, depending on the time frame and the relevance of the bullish bearish price action that we're talking about. So first, a little bit of bullishness to complete the gap to roughly around 7,533, 6, whatever it looks like right now. I think it was 33. But of course, imagine, expect some slippage, potentially even to that level that is nearby, 754. So maybe we're going to test 754,181. That is a potential level that can play a role. And still, that will be a lower high. As you can see, a lower high. A high, but a lower high. Pretty simple. That is indicative of a transition and a move downwards. Okay? That is, normally these things come together. Transition from a bullish to more so tilted, and downwards. Too much shit on the screen. I know. I'm sorry. Let's try and clean it up. That was not necessary. Could have kept this. Okay, good enough. That looks like I drew a third thing. Alrighty. That was the cucumber harmonic pattern, by the way, for those who don't know. So, what are we really saying? We're basically saying that those who haven't been here the entire stream, so summarize everything real quick, is that we, if you look at the broader picture, if you zoom out, you realize we are curving inwards. Those who are relying on that little bit of bullishness that we're having right now, I'm sorry to tell you, it still will result in a downwards trend. It is what it is, boys and girls. And then we're gonna have a neckline, as I said, somewhere around right there. Let me go back to the previous chart I was showing it, right? So we're gonna have a neckline right here, and here I already am predicting, look how far ahead I can look. I can say basically that eventually we're going to have a shoulder that may result in a retest of these highs, or far more probable highs is 6,666 area, because it has a multitude of support and resistance levels that are very strong, and we already saw them play a major role before. And so it is far more likely than, I mean, it can be any of these areas, really. I mean, it can be even as low as this, as low as this. It can be all sorts of things. Of course, don't forget it's going to have its own internals. But even that will culminate and result in a lower high, tendency down, bigger picture. Everybody understood, yeah? Splugendugen? Exactly, Ray. Exactly. We are basically at the edge and the precipice of seeing, guys, I've been saying, and I literally posted on my channel, for those who do not know, let me show you, ladies and gentlemen, on my channel, I was showing, preparing, everybody was screaming, how come the market didn't let us know, blah, blah, blah. You see, look, we are following geopolitics, right? I mean, look, geopolitics is not a secret right now. Geopolitics are saying this sort of shit, right? War is back. I warned you, and I knew this thing is going to happen eventually anyways. So there's no surprise for us, right? Even though it took a little while. Oh, shout out to Tusik TV. Tusik is bottom, is Heine. So it's just a nickname, but we do like Tusi. Tusi is amazing. Tusi is an Iranian who lives, the guy who originally is Iranian, and that was Tusik. He lives, Tusi, Meyer. He lives in UK, and he does broadcasts and informational sort of videos about what's going on in the Middle East. His family itself is from Iran. His father, I think, right now resides in Iran still. Yeah, I know, that's really fucked up. Basically, under the regime, yeah. And so he's super objective. I just love this guy. He's a goddamn legend. Absolutely legend. I highly recommend, cannot recommend his channel enough. Absolutely. So, on my channel, I've been warning and saying for some time now, look at that beautiful face, look at that mug. I've been saying for some months, because again, I've been saying simultaneously that, look, in front of you, we have more bullishness, blah, blah, woof, woof. But the bigger picture is I've been preparing people for that tsunami for some time now. If we go to my, not shorts, to my, no, wrong thing, to my videos, right? And I've been saying that we're going to drop to 61. Look, this is a month ago, right? What English much, bro? What was I saying there? 6,100, you see? 6,100 S&P. I was saying that a month ago. In fact, if you look, yeah, we're left, right? Market tsunami, you see? That's 2 months ago. So when everybody will complain, why? Because this process, this sideways price action that we've been, although it misleads majority of market participants, I knew as soon as we started this, all of this poo-poo will culminate in a downtrend, like so, and then like so, on grand scheme of things, right? So I've been warning about this for some time now, and you need to follow and be up to speed to know that I've been saying. So let's see what you guys saying in the chat. Sorry, I can't do all things at the same time. You guys are saying, no, don't sign out. I don't want to sign out. Plus, if you don't believe the technical part, you should believe news. The war is expanding and it will get much worse before it gets better. Absolutely true. This means that we will have a trigger for this to happen. I believe it'll happen. Yeah, absolutely. Yeah, yeah, absolutely. Damien, good, absolutely wonderful point, my brother. You look. You got to understand that most people, just like with the war with Ukraine and Russia, people kind of wake up and look out the window, like they get scared by the media and they hear all that crap. And day by day, the longer it sort of this whole process takes, and people have kind of the memory of a goldfish and the attention span and just the patience of a goldfish really as well, or a toddler. Majority people, unfortunately, even the adults that should be adulting, unfortunately, are very impatient. And so, look, those who are impatient, the market doesn't give a shit about. Unfortunately, those are the cannon fodder that end up being the food for the market. And you got to know cyclicality properly. You got to understand what the cycle is all about, how it works out, why it works the way it does, to understand what's to come. Because if you know what the current step is, you can assess what the following step will be. If you don't know about the cyclicality, look, you cannot connect dots that you're not aware nor familiar with. It's that simply how things work. And so you got to know about these support and resistance levels. What are they derived from? How strong some of them are? Why other ones are weaker than others? And so, in other words, it will make a lot more sense. By the way, something that makes total sense, as you can see, what served us as a support right here, right? This entire, you see, batch was basically sitting on this shelf, right? This very shelf right here in the future can be the very culmination of the shoulder. Yeah? Just to kind of explain how things can play out ahead of time. And the fact that I am knowledgeable enough to see these things ahead of time shouldn't be held against me, but rather in my favor. Because I can see things far ahead of anyone else and explain why they happen. Rather, again, I'm just the interpreter. It's not like what Greg says happens. No. I'm just merely the interpreter of what the market is already saying it's going to do. And the market are the people with the most liquidity, people who control the liquidity. And those who control the liquidity control the market. No secret here. I hope you all understand that by now. And if their liquidity is slowly moving from being bullish to more bearish, guess what will happen over time? It's pretty simple. Doesn't take a genius. If you hold a sleigh down the slope and let go, eventually it's not going to fly up into the air. It's going to start dropping downwards. Yeah, we're all on the same page. Yeah. Alrighty. Good points right there, everyone. I would love to hear what, people don't really comment often. I think they're afraid of my criticism, which I really am not going to criticize. Look, I understand that everyone has a different scope of knowledge. I do expect, if I talk to my mechanic, I understand that my mechanic probably knows a lot better than I do. That's why I chose him. He's a good mechanic, reliable person, right? But make sure you're talking to a reliable person. Don't just listen blindly to anyone and everyone. In fact, that's the problem, that a lot of people, far too many people, listen to the stupid media, to the talking bubbleheads that are being invited on purpose to convince you of a narrative that they want to convince you. Sure, buy, perfect time to buy, yes. Don't worry, if you look carefully, you're going to realize they do what is known as double speak. And in fact, they simultaneously, while telling you to be bullish, they're telling their whole clientele to be bearish or adjust or this and that. Why? Because later they will be able to say, look, we told you to be prepared and be worried and understand that this and that may happen while we were saying you should be bullish as shit. It's that double speak trick. It's pretty ingenious, I would arguably say. So, yeah. Oil, those who don't know, also I've been following oil. I've been telling and preparing everyone, kind of like we knew that the oil will test lows. You can follow my videos, of course. I highly recommend those who are not subscribed. I highly recommend, by the way, to become, of course I recommend that. Greg, we're gonna pay you $10. Oh, I'm gonna be rich. I'm gonna be a billionaire from your $10. No, but really what you can do, or you should do for yourself, is really, do join the Discord, join the Patreon. This way you'll have access to the Discord, where I post and talk to my members pretty much on the daily basis, whether it's from charts, that I inform my members far in advance. My members are first to know about everything, about my thesis, the expectation, why and how, and all that, and so on and so on. For example, you can see these posts. Like what I'm telling right now, what I'm saying right now, is just something I came up with yesterday. Those are things I've been touting and saying for quite some time. And the longer, and like, not just that, videos, community meetings. Of course, there is the academy where I actually teach one-on-one properly, like no one else, in a proper sort of technical analysis university kind of setting. So yeah, you definitely want to join my technical university. You know why? Because then you'll be independent. You'll be able to look at these charts and understand these things and see through the noise and through the bullshit of the market without being a sheep. Unfortunately, that's the reality. When you're completely blind to these things, you're not going to understand why one thing or another happens. So when you do, when you are able to analyze on your own, in fact, you can argue. This is Plug, by the way. We're talking about Plug, a very potential nice trade we're going to, at least I'm going to have. My members are aware of my portfolio, what my plans are. I'm very open with them. In fact, completely transparent. Some of the people here in the chat can tell you I am 1,000% out, 1,000 out of 100% transparent with my members. My members are basically my core day-to-day work and my guts and soul of what I do. Why? Because I care about them a lot. They're awesome people from all countries of the world, from all facets of society, and I highly recommend becoming one of them. Being led to the slaughter. Yeah, being led to the slaughterhouse. A lot of people are being led to the slaughterhouse because they don't know any better. Look, you can't make data-based decisions if you don't understand the data. Make sense? Just like if you are staring at a book written on a language you don't speak, there is no point staring at the book. The longer you stare at it, you're not going to become wiser. And so that's why I recommend people stop wasting your time while the academy is still discounted somewhat, right? I understand it's not really cheap. Comparison to the profits, the gains, or rather the losses you'll prevent yourself from having by being able to have those technical skills to analyze on your own are very significant, ranging from momentum, cyclicality, structures, harmonic patterns, and everything in between, support, resistance levels, channels, momentums, all of it together, and all the levels, because you need to understand the more basic stuff as the advanced stuff together to derive a proper decision. Again, I'm not one of those, copy me, do as I do kind of people. I'm like, no, guys, this is how you analyze this, and then make your own decision. Of course, can give you my 2 cents on it and analyze on my own with you, for you, and so on, which we do often in the community, various different assets and so on. But really, there's more to what we do because we're following the broader cycle of the market, and we're basically subjects of the market. We don't impose the market our gut feeling, because that's never going to pay out well. We always follow and look at what the market is saying it's going to do and try to adjust our actions according to that process that the market's going to do anyways. We're just, like I said, subjects of it. So we're a little bit bullish right there on the quarterly, as you can see, on that oil front. So I know I stretch things out because I'm trying to make it obvious, right? Because if I'll just draw it like so, which it doesn't have to be, it can actually be very gradual, which it most likely will be. But on the grand scheme of things, yes, we are looking upwards, even though temporarily we are having a bit of a monthly correction. So we're far more likely to see a little bit more of a sideways sort of behavior before. But on the broader scheme of things, don't forget I said we will be going back to 120, whether we like it or not. Or because that's what the quarterly implies, at least for the time being. We'll see. Maybe it will change. For now, bullish. Look above me. There's a breakdown of how the stochastic RSI works. Look. Very simple. Right above. I made a whole thingy for everyone to be able to understand. What am I speaking here? Spicky. So. Okay. Just took out an iceberg right there. That's it, ladies and gents. I think this is all for today, for today's live. I appreciate everyone who showed up. Roy, Ray, Damien, Casey, of course, and all the others who I'm not able to see that are here. I hope you all have a wonderful day. This is kind of a general guide to what we're seeing right now happening in the price action. So yeah, don't forget, we're far more likely than not to see a little bit more bullishness playing out. But on a broader scheme of things, we are about to turn around sometime soon, probably around 7,533, sorry, 7,540, basically that handle-ish range, as you can see on the screen, kind of like so, these areas. And once we do, we will start moving very rapidly, very strongly downwards. So get ready. Don't say, no one warned us. We didn't know. You know. Alrighty.